Hello, everybody. Welcome back to another Market Open. It is July 25th, 2023. It is 9:20 a.m., and we have a lot of news to get into. Spotify has reported numbers. Google and Microsoft are going to report numbers. Tom Lee went on CNBC and said some very interesting things. And overall, I stayed up till 3 a.m. last night reading as many articles as I could, trying to understand, is this a bear market rally because my, as Chris calls it, spidey senses are tingling even more and more? Or is this something that genuinely is the start of a new a bull market? And I've come to a couple of conclusions. I don't know if they are correct, but I can tell you that I've been reading and researching a lot over the past couple of hours to try to get a broader understanding of what's going on. And we've got a lot to talk about. So we got a lot to get into. Hello, everybody. Dex, Ricardo, Master Guna, Jubei, MC, Johnny, SJ, Bryant Robinson, Dan Harkis, Bexino, SK, Midwest, Iceman, JJ Canman, Geist Power, Napster, Mike Arcangelo, Carlos Alvarez. I definitely said that wrong. Alvarez, probably. John Schwartzbeck. ER was right. Guys, all right. Thank you all for being here. We've got a lot to discuss. Now, first, so there's a lot of stuff to get into today. Before I get into get into a bunch of stuff, top headline news, of course, Palantir's Alex Karp has published a piece inside of the New York Times. Very interesting piece. I'm not going to read it live on here, but probably we'll do a video on it much later. It's called Our Oppenheimer Moment. This is a really interesting one. Tess, Nicole, Anthony, Ty Gorin, thank you all for being here. Karp publishes a piece called Our Oppenheimer Moment, the Creation of AI Weapons. Obviously very timely. The movie came out, Oppenheimer. Let me know if any of you guys watched it. Alexander Karp is the CEO of Palantir Technologies, a company that creates data analysis software and works with the U.S. Department of Defense. And he writes an article in the New York Times specifically around how we as a species are now in a moment in which we could leverage technology that is as powerful, in Karp's opinion, as the atomic bomb. And I don't think Karp is over-exaggerating this. Sam Altman has said this. Elon Musk has said this. Most of the big tech figures of our generation have said that artificial intelligence can be used in a way that could be a tactical nuclear weapon. And we have a responsibility towards it to be ethical and to, make sure data is secure. And so this is a really interesting piece by Karp. I haven't even read the whole thing. I've barely gone into it, but I will be reading it a little bit later today and going deeper into what Karp is trying to get out of this article. So that's kind of the top news that came out today. Now, next piece of news before we get into some of the macro. Spotify. I cannot tell you how close my finger was on the button yesterday to buy puts on Spotify. I mean, literally, if there was a recorder of my life, you would see me yesterday at like 2 p.m. I was looking at the put prices, and I was like, I'm going to buy a put. I'm going to buy a put. I'm going to buy a put. This is the first time I was ever going to buy a put on a stock ever in my life. I was going to do it on Spotify. The reason I did not do it is because I thought the market might interpret their accelerated user growth, honestly, their phenomenal user growth, as a reason to, bring the stock higher. That's not what happened. That is not what happened. So Spotify reported monthly active users from 530 to 550 million users. So more than, it's like very close to almost 600 million people. More than 500 million people are using this product. The problem is the revenue came down. You see the market dropped at about 5% in the pre-market. Revenue came down. Average revenue per user came down. Their ARPU came down. Margins did not come in as well as expected. They increased a little bit, but just not enough to get super excited for. And premium subscriber growth, I think, went to like 220 million from 210 million, which is good. But a lot of those premium subscribers are from other parts of the world where, there's just not enough to make money off of. I mean, someone yesterday, literally, they downloaded a VPN, they set their country to Bangladesh, and instead of paying $12 a month for Spotify because they're increasing the price per subscription in the Western world, they're paying $2.40 because now Spotify thinks they're from Bangladesh. So, I mean, it was a really interesting thing. Look, I think this company is actually going to be in a good position long term. I thought their user growth would accelerate them from being down in the markets, but this is a similar situation to Netflix. Netflix presented some pretty good user numbers in terms of subscriber growth. Spotify, again, more than 500 million people using the thing, but those subscribers, they just can't monetize them as well as they needed to. So Spotify is the first. not big tech company, but definitely a pretty, important tech company that has felt the wrath of earnings, has not been able to keep up with it. The big guys today obviously are going to be Google, $122 right now in the pre-market, and Microsoft and what they report. And they're reporting, Microsoft up just a little bit in the pre-market as well, is going to determine a lot of things. Palantir is up a little bit in the pre-market, $16.48. SoFi, $9.48. It's up in the pre-market. Nvidia is up $4.49 in the pre-market. Nasdaq 14,058, and the S&P. So the big thing I was looking to last night, which I want to explore over the course of this market open, S&P is down just a little bit, is this a real rally or not, right? Like, are we in a situation where inflation is actually coming down? The Fed is actually getting ready to embrace a new market, not by signaling that they're going to be dovish, but how is the market going to be interpreting a lot of these results? And some of the conclusions I've come to is simply this: Q2 and Q3 earnings need to be so good to justify next year's multiple that we have put on the S&P, which is 20 times next year's multiple. There's a lot of arguments around people saying, oh, people missed the rally, so now they're coming in. And there was this guy, I think you guys might have seen it by now, Steve Eisman, this dude who predicted with Michael Burry the 2008 financial crisis, and they started in 2005, and they were wrong for 3 years until, boom, then it all hit at once, and they made like billions and billions of dollars. His argument yesterday was that the market's going to be fine. The market's going to melt up. There's going to be no issue. Everything's okay. Like we're in a good position. And when someone like that says the market's going to be okay, I kind of don't trust it. I don't know if it's just you or if it's just me, but when the guy who predicted the Big Short, one of the greatest financial crises of all time, and he profits off of it, is on live CNBC saying, yeah, actually, we're invested and things are going to be fine. We don't think there's an issue. I either don't believe him, quite frankly. I'm like, straight up, you've got a net short position somewhere. So I don't know where it is, but you've got a short position somewhere, or something really funky is going on. And that clip that made everyone kind of bullish on the market actually really, really made me bearish last night. And I started to go a lot more deeper into thinking, like, what is actually going on right now? Now, so here's the argument by AJ. There's a ton of dry powder to expand multiples further. Hedge funds are historically heavy in cash right now. And this is the reason why I think the market's actually going to be okay. But there's a part of me that's just like, I don't know. And actually, Tom Lee agrees with me as well. We have 2 minutes of the market open. We're going to open the market, and then we'll get into what Tom Lee thinks. Tom Lee's argument is basically that at every sign of disruption in momentum, the market is ready to short. Like, all of his clients are like, let's short the market, because no one trusts this market. And quite honestly, this is why Google and Microsoft are so important today. I will be streaming them live around 3:45 p.m. Eastern. Google and Microsoft need to justify the rally that we've gotten. If Google and Microsoft and Meta and Amazon cannot justify the rally, including Apple, then this market is going to tank like a brick, because we just can't have the S&P trading at 20 times next year's earnings. It's a hard thing to justify. And I don't know if the euphoria that we had in 2021, even though it's not at the same levels of 2021, can justify some of the same momentum. What happened in 2021 is a lot of people got burned buying at the top, and they just got in right before 2022, where actually 2022 was the actual top, right? 478. So they got in a little bit at the end of 2021 thinking it was just a small dip. This is like when Palantir was in $19, and then 2022 crushes them. And so that's why a lot of people got scared to get in at 2023. Well, that left people missing the rally of 2023, right? Because 2023 was a phenomenal rally to the upside. So now those same people might be trying to chase, but at the same time, they also may be thinking, this is the moment where it all goes to shit. And that's what I'm trying to figure out. Obviously, I haven't figured it out. No one has really figured it out, but I'm trying to put the pieces together of like, what does this all mean? And with also a little bit of reacceleration in inflation, that also is something that is not the best that's going on. So it's kind of trying to navigate everything on where it's going from. 20x PE while earnings are contracting. Yeah. I mean, look, I think big tech earnings will be okay, but if they're not phenomenal, if they're not really justifying it, it's going to be a little bit harder. So we will see what happens. All right, here we go. The stock market in the United States of America is now officially open. Wake your ass up. Here we go. Google at 122 opens up at 0.26%. S&P 500 opens down just slightly at 453.95, down 0.05%. Microsoft at 346.39, up for the day. Netflix is down. Spotify 150, 149.77. Wow, 8%. The market did not like these earnings at all. Increased user growth has not been good for Spotify because they have not been able to monetize that user growth. Maybe that changes in the future, but so far, I mean, the market was not happy by adding 30 million more users because they don't see where the revenue is coming from. Netflix at $428. Palantir $16.41, opens up 0.52%. SoFi $9.46, up 0.05%. ArcG $36.37. Lemonade $22.03. DNA Ginkgo Bioworks 2.29. Meta 294. So this is down from the highs of 318. We got Meta on Thursday. We're going to see what they report. I think Meta's going to smash it and really kill it out of the park. The problem is Meta's run up so phenomenally. I don't know if the market's going to be excited if Meta, just meets their earnings expectations. And that's the problem with big tech. At $88, it was a steal. At $2. And here's the thing: if Meta was at like 200, from 88 to 200, it would be so much more reasonable. This market would be so much more reasonable, I think, to a lot of people. Meta being at 300 makes the market immediately think, what's going on? Why is it at this level? And a lot of reasons it's at this level is because so many people missed the rally going up from 88 to $100, $140. Arc Innovation at 47.80 cents. DraftKings 31. Nvidia 450. True breaking out of that 446 range it was in, now at $453. I actually don't know when Nvidia reports, but it's not this week. I believe it's going to be next week. Nasdaq 14,100. So we're up on the Nasdaq. Enphase 179.88. Bank of America is down. JP Morgan is down. So some of the financials are down. Wells Fargo at 46. We've got, what else do we have? SLG is down at 35.86. Carvana, the Carvana short interest is 49.67%. I didn't know that was the case, but it is one of the most shorted stocks in the market. So if anyone's trying to chase that one, just remember that even if you're trying to short it, it's hard to short a stock when the short interest is already that high and trying to make money on the downside. Apple at 193 now, continuing to be above the $3 trillion market cap. Wow, Amazon below 129. I didn't know Amazon was below 130. It ended at 128 yesterday. I didn't see that. Okay, so we got Amazon at 129. Their earnings also needs to be really well in order for things to be good. You say Spotify just raised their price by $1 a month. Here's the dirty little secret people don't know about this. The record labels have a deal with Spotify, so they get 65 cents out of every dollar. So even if Spotify raises their prices by $1, they only keep 35 cents out of that dollar to their bottom line because the record label still gets 68% of the $12.99 versus the $11.99. So the question simply becomes, how can you, at what point do you raise it so significantly where even with that 35%, you're able to still make margin? And I've analyzed Spotify's business model very deeply over the past 2 years. I've talked to people who have analyzed it very deeply. It's people who are much smarter than me, who run some different funds in North Carolina. They do not see where the unit economics are on that business at all. I mean, you could have 1 billion users if you can't make money off of them and you continue to lose money. And it's been 12 years you've been a business. It's a little bit tough. The music industry is ruthless. It's very tough. And that's why I've just never invested in Spotify. Tesla at $271 now, up 0.86%. So Tesla doing a decent recovery from 254. It was at 299, dropped to 254, recovered to about 271, $859 billion. So Tesla not doing a bad job as well. Elon Musk has now created Twitter into X. So I am a Zeter is what they call them, which to me sounds kind of racist for some reason. But on Twitter, it's a Zeet now. It's not a tweet, it's a Zeet or a Keet or whatever you want, however you want to pronounce the X. So I am a Zeter. That's what I do on Elon's platform now. I Zeet. But look, Tesla, it's a nice recovery. It's not bad. I mean, 254 was a decent low. We'll see if it dips any further, if it keeps going, but it's not bad. All right, let's get into Tom Lee. Obviously, his thoughts are very important right now. The reason his thoughts are important is because he is been the biggest bull. He said S&P to 450 2 weeks ago, and it happened right on the dime. But he's kind of getting a little bearish on it. So I want to listen to his thoughts and kind of see what he's saying right now. Let me open up the thing. Here we go. Thank you, 490 people, for being here. It means the world to me. All right, let's take a look at what Tom Lee has to say.
Tom Lee is here. Good morning, Tom Lee, Fund Strat. It was 2 weeks ago. It was a Monday, and you made that call of 100 points on the S&P on a softer inflation number, and that happened. So then last week on Monday, we had you in again to talk about it, and you said you're still bullish. So Monday, I just did the math, 11 straight days in the Dow. So you were bullish on Monday. but you weren't going to say anything about the week. You're smart enough to stop doing that. But so you're got credit for another 6 out of the 11 days. So it's been 6 more days after that the Dow's been up. What did you see differently than people like Mike Wilson at the beginning of the year for you to be at 40? Where were you at the beginning of the year? 4,500?
4,750.
4,750 at the beginning of the year. Mike Wilson's now saying he's at 3,900. The bear case for him was 3,000 or 3,200. And the guy at Piper Sandler was at 3,000, was like a slam dunk for him for where it was going to go. What did you see that was different from these gentlemen?
I think the biggest difference was we were looking at the inflation internals and thought inflation was on a glide path lower than consensus and even the Fed expected. So we thought there was a good chance the Fed could sort of back off its fight against inflation, and that would make it a 1982 moment because it's an inflation war. So I think that was probably the central thing. And the second is we had a lot more belief in corporate resilience. I think companies last year were given notice to prepare for this massive hiking cycle. They ran expenses really tight, and delivered earnings this year have been much better. So I think the combination would support stocks.
Just overall, Tom, just your approach to trying to decide how devious the market acts, and you can go all the way back to Jesse Livermore. It tries to do things to confound as many people as possible, so that not as many people are right going up or down constantly. It tries to do it. So if you've got a person that if you were all talking about a recession and we're all talking about lower corporate earnings and that earnings got to come down, and we're all talking about these things nonstop, and people are very, and say we're going down another 20% when everybody on the street knows what's happening, can't you just say that probably isn't going to happen, that it's already in the stock?
Now, this is a good question from Joe, okay? Because Joe is asking the perma bull, hey, if everyone is saying recession's happening, why isn't it correct to be contrarian, like Tom Lee's being contrarian right now about a bull market happening, not a bear market? And his response is interesting.
If you have that job, why doesn't that inform you that maybe you shouldn't go with the crowd? Why can't they figure that out ever?
That's exactly right. At our company, we talk to our clients constantly, and that was also pretty evident. Every time the market plateaued or wobbled this year, our clients were ready to short and to sell. And even this week, the market wobbled, a couple days last week, and people are ready to short the market. So I think we're still in a position exactly described, which is people are bearish and ready to sell. No one's really embracing this as an upward new bull market.
That right there surprised me a lot. Okay, we're going to keep going through this, but that really surprised me. So his institutional clients, and that's why I like getting a look of Tom Lee, because he actually has a decent number of clients, and they kind of reflect what's going on Wall Street, even though they trust him as being kind of the perma bull here, is saying as soon as there's weakness in the market, and this is exactly what I was seeing in my research last night, when there's weakness in the market, what a lot of people are thinking is, all right, it's time for it to collapse. So it's like a balloon, and we're blowing a ton of air into it. And like you start seeing a little signs of like, oh, it's about to pop, and like people are ready to like take the nail and actually pop it themselves, so they aren't the ones left, basically holding the balloon bag. And for a perma bull's institutional clients to also feel like that is just very interesting to me on the back of inflation coming down at a pretty aggressive level. And so I don't know. I don't know what we're heading into, but I do know that if Google and Microsoft shit the bed today, it is very fragile. This 450 on the S&P, this trading at 20 times next year's earnings, is a bit more fragile than I think we think.
I don't want to harp on Mike Wilson, but so he's finally.
Oh, final interruption real quick. Mike Wilson, this is really important. The reason Joe's bringing up Mike Wilson, this is a guy who said since last year, S&P to like 3,200 from Morgan Stanley. He came out yesterday. I forgot to report on this yesterday, early in the morning. He sent an email to his Morgan Stanley equity clients and said, I was wrong. He admitted they were wrong for not being in this market, and now they're back in this market, but they're still bearish on earnings. So he says he was wrong, probably S&P not to 3,200. He has S&P to 4,200, but he said he was wrong, which is bullish. But also in the back of my head, I'm like, there's too many, bears starting to get bullish now.
Be able, you gotta somehow get yourself out of that pickle and say I was wrong. But his with the mea culpa, his year-end target's 4,200. So it's just more of the same, right?
Yes, that's right. You can tell people are still bearish because the strategist year-end target on average is 8% downside. And the strategists reflect the buy side sentiment. So most professional investors think the market's going to go down between now and year end. I think,
Good.
yeah. So then
Have you been wrong more often by being too bullish? Because that would be my problem, I'm sure.
Well, I've been covering markets for 30 years, so I've been wrong a lot.
On both sides.
Yes. You know, I learned that being bearish was really painful when I did wireless. My most famous short sell call was Nextel, which did run up for a long time, but then finally essentially imploded Sprint. So, but it was a painful.
Jesse Livermore.
Is that why you're more optimistic now? Because you got burned by being bearish at times? I mean, like if you look at the markets over the long haul, if you're doing this for a long time.
It goes to 800, from 800 to 45,000. It's probably good to be long most of the time.
Yeah. Well, you know, I covered wireless when it was 34 million subs and it went to 7 billion. And everybody called it a speculative bubble sector for 14 years. So I think I'm just used to people being so negative about the future that we tilt a little more positive.
It's all.
Look, and that's a good point for why, and we'll get back into that a little bit more later. That's a good point for why Tom Lee is more bullish on the market than not, because he's used to all the skepticism and negativity. But at the end of the day, we're in a fragile place right now. Make no mistake about it. We are in a fragile place. I know we've got the election year coming up. I know we've got inflation coming down, and I'm not bearish by any means. I'm not selling my portfolio or anything like that. But because look, if my portfolio dips, I'll take the dip with it. I mean, I will buy on the dips because overall, I think we're headed into a good place. Because I think we had 2021 and 2022, which was the meltdown, and a lot of equity analysts, especially hedge funds, are chasing it now. But it is simply a question of if this rally is able to continue at scale, and it's actually able to continue to do the things that we want it to do. Tesla now at $271. We got Spotify, wow, down almost 10%, so 9.66. The market did not get excited for this one. This one is definitely down today. Netflix at 427, Microsoft at 346, S&P at 454, Google at 122. We're going to talk about expectations in a little bit. SoFi now at $9.56. So SoFi showing a little bit of a breakout here at $9.56. And we're going to keep seeing how that turns out for the rest of the day. Meta Platforms at 295, Nvidia at 455, Nasdaq at 14,115. It's a green market. This morning, it is a green market. Now, we've got to preview Google, Microsoft, and what jpow is going to do, but we have a green market for today. Michael Wilder says, don't stop investing, people. Even small buys, staying out of the market is never a good idea, especially after last year. I agree. Let me be very clear. I am not saying to get out of the market. This is not a bearish call. I'm saying that it's looking interesting if you look at all the details. Also, like, even if you were to get out of the market, you couldn't time getting back in, right? So that's why I don't believe in like trying to time it. Like, it's just impossible. I'm definitely not as smart as me, Kevin, to be able to do that shit. So like, that's not something I can do. I'm just trying to put some of the pieces together and trying to read kind of what's going on. Here's the thing that puts a nail in the coffin when you try to give an overarching like bear thesis. There is not a major catalyst that we are seeing presently. Now, there could be a catalyst like credit tightening. There could be a catalyst like inflation reaccelerating. There could be a catalyst like a geopolitical event. But so far, there is not one that I see. And that's why I think this guy behind me, that I will be listening to every fucking syllable that he says tomorrow. I'll be streaming it live on the channel. This guy is going to say, we're going to raise once. We're going to do what we have to do. Market's going to bake it in. I think market's actually going to be happy that he's just getting it over with and he's raising. And then he's going to leave the optionality for him to raise a second time, but he's not going to be as explicit about raising the second time because he doesn't want the market to bake in that there's not going to be a second raise. Even though there's probably not going to be a second raise, he doesn't want the market to bake that in because that might lead to inflation going higher. So he's going to be sounding hawkishly dovish. It's going to be a very weird line he's going to have to navigate. It's like when you're on a date with a girl and 20 minutes in, you're like, man, there is no way in hell this is going anywhere further, but you still have an hour left to go on the dinner. And so you're trying to walk the fine line of like, how do I deal with this situation? That's exactly what jpow is going to be doing tomorrow. And it's going to be kind of interesting to kind of see, where he goes in from there. Bears sound smart, bulls make money. I agree. Cedric says, even hedging is super hard on the timing, always a battle. Am I hedging or not? Which makes it simpler to just let it run and wait through cycles. I 1000% agree. I think hedging really makes sense, to be honest, when you have a substantial portfolio size. I'm talking like in the millions. And with that substantial portfolio size, you're able to do a lot more than, than the average person. And so because you are taking on so much risk, the hedge makes sense. But outside of that, it's a little bit harder to be able to do that. Okay, let's get into talking a little bit more about inflation. This is a little bit of a preview for what we should expect from inflation tomorrow and what the Fed is thinking. And then we'll get into Google and Microsoft expectations.
It's two-day policy meeting. It's widely expected, to deliver a 25 basis point hike at its conclusion tomorrow. Joining us now, Megan Graper. She's now the global co-head of debt capital markets at Barclays. This is this is what you do, Megan. So where are we? We 80%? Where are we for today? What are the comments going to feel like? And then what about at the next meeting? What are the prospects?
Yeah, it's about a 96% probability baked in here. So while I think you could argue we're operating in a backdrop where recent data has effectively bought the market and the Fed a bit more time to assess the impact of previous hikes. We've had 10 hikes now. You think it's all but certain the Fed is going to move forward with that 25 basis point hike at tomorrow's meeting. That's in line with the June statement. It's in line with the most recent dot plot, and it's consistent with the Fed speak we heard prior to their blackout. So I think while Powell is likely to acknowledge that inflation is actually trending in the right direction, I think very quickly the focus in the Q&A is going to shift to reinforce that their 2% inflation target is far from mission accomplished. I mean, you've got a labor market that remains exceptionally tight. You've got nominal wages that are still high and supporting consumption. And you got a housing market that is bottomed out. So a lot has to go right for them to reach a 2 handle on core PCE in 2024. And so I think, you're going to see.
And that's one of the reasons where it doesn't matter if we get 25 or 50 basis points. We can get another couple rate hikes. It really doesn't matter. What matters is how long is the Fed going to leave interest rates high? You could even give us 75 more basis points. It doesn't matter if by 2024, by January, February, we cut and then we're on the downtrend. And so what the scary part is about this whole world we're in terms of this market is even if we, are ready to pause, if the Fed leaves it there for an extended period of time because they don't feel like they've won the fight on inflation, then equities are not going to be able to get to a new level. They're not going to have a leg up.
See, with 2 employment releases and 2 CPI prints before the September meeting, an ability for him to retain optionality here. I think there's zero upside to him being much more prescriptive until that end game is more clearly in their line of sight.
Think if they did go 25 today and then another 25, how far the 10-year is from where it really should be if it really believed that the Fed was going to remain firm in its resolve. So are they counting on bond market participants to finally find religion, to finally buy into what the Fed is telling them? Because they're just going to move it further and further away from reality. What's going to finally happen? The Fed going to have to admit could they be wrong and they come back down to the 10-year, or is the 10-year going to slowly, gradually get up to 4.5% or 5%?
I think we're going to be a bit more range bound. I think what's surprising, if you look at sort of the 65% probability of a recession over the next year, which is where we were and was consensus at the start of the year, that number effectively hasn't budged. I think what has changed is the timing and the magnitude. So we're pushed out from the first half to a late Q4, early Q1 recession. And I think there's an increasingly pervasive view that that's going to be a more mild recession. So if those expectations ultimately play out, I think that factors into the path of rates ahead. And should a recession remain more elusive, which is really the baseline in our view, yields may actually be biased higher as those cuts get pushed out even further and the Fed is on hold for longer. I don't think that's baked into the market. We're already pricing in a cut by Q1 of next year.
And that's the part where I'm also confused. Even SoFi, I think in their earnings, they priced in 2 cuts this year. That's not going to happen, right? Maybe it happens, but this all depends on if we can get inflation down aggressively, which means next year's or next month's CPI and core PCE really, really do matter. And with the tightening labor market, it's kind of hard to see, can the Fed do the impossible? Can they manage getting inflation down, which they've done so far, to their credit, while not having massive unemployment, but still having inflation cooling down. It's one of those incredibly difficult things to do. In the I might be getting the date wrong, but I think 1980s, the Fed stopped raising a little premature, and inflation came back roaring. I forget the year it was. I was listening to something about last night. And then we had to raise interest rates by double digits just to be able to calm the inflation that came back sometime in the 1980s. I'm forgetting I should know this, but I'm forgetting the exact dates. And so the person talking about it last night was analyzing that this theoretically could happen, and we're seeing a little bit of inflation reacceleration. No one wants that to happen, but if that does happen, well, that's not a good thing. We've got true-flation data. It's still at 2.4, so it was at 2.4 yesterday. Obviously, you see that little hike right there. It was a bottom in June at 2.1 or at July, and then it came up just a little bit. My hope is that this rebound is really just a rebound because of it bouncing from the bottom, not some unique event that is destroying the economy. Oh, I'm not even sharing it here. That's not hurting the economy that badly. Oh, it was Paul Volcker? Okay. I didn't want to say Paul Volcker if it wasn't Paul Volcker, but it was Paul Volcker. Okay. And so inflation's up just a little bit, but it's not up so massively that we need to be really concerned, or it's not because of something unique that is a catalyst for it. It's more so just because it's a little bounce from the bottom and it's rebounding a little bit, but it's not something that crazy. So that's something to keep an eye on. It's something to really, really keep an eye on, because if that goes the right way or the wrong way, then it's going to determine a lot of things. Okay, let's get into Google and Microsoft. Google and Microsoft determine everything today. If Google and Microsoft don't do well, then, well, you know, things are going to be bad. If Google and Microsoft do well, it's going to have to be basically not, I don't think it's going to be amazing. I think it's just going to be regular, right? That's what we want to see. We want to see the market kind of be flat or up slightly or even down just slightly. But we don't want a Netflix Tesla scenario where they actually do well and then the stock market, you know, just collapses. And it's like, all right, well, they didn't do well enough for us to basically get excited. Let me type in this right here. I'm looking for the exact thing that I was looking at for. Let me see if I can pull this up. Okay, here we go. So Google expectations. We have a basic EPS of $1.34. The market is expecting $1.34 a share for Google this quarter. And that the last quarter was $1.17. So about 20 cents upwards. And then basic revenue. Last quarter, we saw $69.78 billion. This quarter, we're expecting $72.77 billion. So about 3 to 4% increase in terms of earnings. So the numbers we're looking for are 1.34 on the EPS and 72 billion, which is just insane for a company to pull up $72 billion in revenue. But, you know, if that comes in a little bit lower than expected, that's not going to be the best. So that's what we're looking for on Google. On Microsoft, here we go. This is actually the right picture I was looking for. Let me share my screen right here. I think the 2 rate hikes are priced in. I think 2 rate hikes are priced in as well. The question is just how long are rates going to stay the way they are. Okay, so Microsoft, here we go. We've got expected sales of $55 billion and expected EPS of around $2.55. So an implied move around 5.4%. Now, what are the catalysts for Google and Microsoft each? From what I've been analyzing, it's a couple of different things. Also, put in the chat if you own Google and Microsoft. I do not own either, but put in the chat if you own any Google and Microsoft. Okay, so for both companies, AI is going to still be a thing. They need to show that AI is not just, you know, saying the buzzwords in the actual earnings call, but propelling the vision of the company. So when Microsoft announced Copilot, which is their AI empowered or AI enabled Microsoft Office suite of services, Excel, PowerPoint, etc., the market gave them like $80 billion in market cap because they just imagined 10% adoption was going to lead to like $16 billion in bottom line profit. So it made a lot of sense for Microsoft to be able to announce that. And that's just on a subscription base, on a subscription product. Imagine what they can really do with AI when you talk about enterprise and all that stuff in the future. So I think Microsoft needs to give a clear trajectory for how diversified they are in regards to AI impacting every level of their business and what that means for the stock long-term, given Microsoft is close to a $3 trillion company. On top of that, they need to talk about the Activision Blizzard stuff and what that also means. I think it's going to go through. I mean, it's all but certain outside of a couple of courts that's going to go through. What that means for the trajectory of the business as well, because they spent $70 billion on that. So what does that mean going forward? Google is likely going to be 95% advertising revenue. I mean, I looked at their thing, or it was like 84%. They put up $7 billion in GCP revenue, and Google Cloud finally got profitable. If Google Cloud could get profitable without them doing financial engineering, they kind of pulled a Palantir Q4 GAAP profitability, just put some numbers here and there and said, look, we're GAAP profitable. And then Q1 Palantir got some love for the market because it was GAAP profitable on a business from operations basis. If Google Cloud can actually be profitable and not just be this thing in the back that's bringing in billions of dollars, but not turning a profit, I think the market's going to like it. On top of that, they need to show a resurgence in search-based advertising that does not have an existential threat by the likelihood of ChatGPT. If ChatGPT, which their traffic is down actually 34% month over month, but still 1.5 billion people are using it. Google has 84.6 billion people using their product every single month. If they can show that, look, this little Satya Nadella said he wanted to make us dance. This guy didn't even show up to prom. If Sundar Pichai could say something like that, a little mic drop, bro, they shouldn't let me be a public CEO. If I was a public CEO, my God, bro, they wouldn't let me survive. I would be, those analysts, bro, they would be laughing too much to ask me a question, bro. They would be laughing way too much. Like honestly, bro, if our ARPU came in lower, they'd be like, so why is your ARPU lower? I'd be like, bro, we're getting a ton of business from places where we have a ton of ARPUs in India. So yeah, the ARPU is going to be lower. Have you ever been to India? The fucking cows are shitting on the road. You think they can pay $10 a month? Are you fucking stupid? This is what I would say to the Morgan Stanley guy. And he would start laughing so much, I think he would upgrade the damn stock. He would be like, fuck it. This guy's smart. This guy's going to figure it out. I'm going to upgrade his stock. He's actually funny. Can you imagine if that happens, bro? That'd be, I'm going to clip this shit. If this happens in 10 years, I'm literally going to clip this moment and be like, yep, I said I was going to do it. But anyway, Sundar Pichai needs to literally be like, they're not making us dance. They're the ugly girl at the prom. No one wants to dance with them. We are dancing alone. We're the prom king and queen. And so search is not an existential threat. We don't really, Bard is doing very well. Bard got exported to like 59 countries yesterday. And as a result of that, like no one's messing with us. We're Google. You should keep buying our stock. We've got tons of runway to go. That would make the market so exciting. Microsoft doesn't need to win the ChatGPT war with Google in order for them to get their premium. Microsoft's also worth double what Google is right now, or like 70%, 50% higher than what Google is right now. And so both can do phenomenally well on their own, but they've got to be able to do this. They've got to be able to do this. Thank you, 600 people, for being here. Let me ring the cowbell for that. I appreciate you guys so much. Thank you all for being here. It means the absolute world for me. I'm telling you, bro, if I was a public CEO, so I have dreams sometimes. Obviously, I have a startup. I want to bring it public one day. I know how that's crazy that is to say that, but like a guy can dream, right? Imagine if that happens. I have a vision of myself, S&P now recovering at 454, where we do our earnings calls. Like I'm a basketball player. And you know how like when LeBron does the post-game press conference and there's a bunch of reporters there and they're all asking him questions and shit, and he's there wearing his like post-game outfit and he looks super fly. I have a vision that every quarter we actually build a little bit of a set where I step out onto the post-game press conference. And I sit there and I like call on reporters like LeBron is calling on people to ask him questions. And I'm just sitting there and I answer their questions. It would be so cool if that would ever happen, bro. That'd be like one of the coolest things ever. But I would make these guys laugh. I would have no chill, bro. I would not be afraid to speak my mind. That would be fucking hilarious. All right, Google at 122. Also, we would stream it live on YouTube as well. Tesla 270, Microsoft at 347, Spotify, wow, continuing to get hammered, $10.55. We're gonna open up their deck in a second and look at their numbers. Netflix at 430, Palantir 1655, up 1.39%, not bad for Palantir. SoFi 949. SoFi not doing bad either, breaking out at just 0.32%. Where's the hood? Where's Robinhood, baby? $12.81. Not bad, up 0.51%. I actually think on earnings, they're going to do decently well. Their net interest income, remember, they have $6 billion in cash. They're going to bring out like $250 or $245 million of revenue on net interest income, which means they do nothing other than just let the business operate and they make half their revenues. The market's expecting about 477. Now, look, June was where I think we saw a bull market. They have to report for April and May. April and May was not like a lot of transaction volume trading on Robinhood, just based on it not being the craziest market. June was like obviously a lot more higher. So I don't know what the MAUs are going to look like. I think they're going to decline, but if the ARPU can go up, it went from $66 to $77 last quarter. Robinhood's going to have a good quarter. Robinhood's going to have a really good quarter. Assets under custody are also going to go up most likely. So I think Robinhood's going to be fine. It's just a question of them being able to execute. NVIDIA now breaking towards 460, up 3% on the day. Meta up 1.16%. ARK at $47. What's down today? What's really down? SMCI at 316. This guy's a killer, man. If you bought SMCI $200 calls back in May, you would be up like 500%. I was looking at it last night. It was just insane. Let's go to TFC. TFC actually did nice yesterday. Oh, so TFC's down today. So it went up yesterday at like 33.50. It went down today. So I guess the market sold off a little bit of the dip that it bought yesterday, probably in anticipation for the rate hikes coming tomorrow. So that's probably why we're seeing a little bit of a decline there. Palantir also at $16.51. I would think Amit's mom swells with pride every time she hears that bell. Her son is dedicated and ambitious. Yes, but she also is so fucking annoyed at that bell. So that is also happening. Oh no, TFC down. What to do? Yeah, for those that are asking me, are you selling TFC? No. Look, I love Chris. I respect Chris a lot, but the thesis on TFC, I listened to the earnings call twice. It has not changed at all. TFC is going to be absolutely fine. I'm going to pull up Spotify's numbers right now. They're just being a little conservative right now. That's pretty much it. It's a bank trading at 50% below of what their PE usually is supposed to be, and deposits are fine. Revenue growth is fine. The reason Chris sold out, from what I understand, is because, again, he's not one of those guys that's going to hold it to maturity. This is what I've learned about him. When he says he's bullish on a stock, he's bullish. And the next week, if something happens where, even if it's incredibly short term, not even bearishness, but just like the stock goes down, right? Like, not a thesis break or anything like that, he will get out of that position. That's just who he is. And he admitted this on Finance Junkies. He's like, I don't hold stock. He's like, the longest stock I've ever held is maybe the S&P 500. That's it. Like, he does not hold stocks that long. So for him, he wanted to capitalize on some gains on TFC. And like yesterday, we were basically at almost where he sold that, or like very close to that. And so it's one of those things where I'm not trying to time it. I'm not actively managing the shit. I actually want this to last for the next year and a half. And I think TFC will be fine. And so, that's kind of my logic there. But again, me and Chris are different. Chris is actively managing his portfolio. I'm trying to like have some long-term plays here and kind of let them just play out. So you got to have an overall thesis. If you don't have an overall thesis, you're going to be very, very, in a different position. Are you buying Tesla, or will your future self regret it? No, I'm not buying Tesla. I'm not buying Tesla. Not right now. Not excited to buy Tesla right now. Again, as much as I like Tesla, obviously, I do think we're in a little bit of frothiness in this market. And we've got I think we could have a little bit more of a downturn before we have an upturn. And I also think buying Tesla at $865 billion is not the right. I mean, Blake, to be fair, you were telling me to buy Tesla at $290. And so you're not really the most objective person I talk about when it's on this type of thing. But in general, no, I think Tesla's still a little high for me, at least, and I don't have that much capital, so I would want to wait it out a little bit. Probably Chris had funds for something more interesting. No, I think Chris is more so capturing an opportunity. Like the TFC options we have, if he let them play out, trust me, they are going to do much better than a lot of different opportunities. He would have to find another 4 to 5x that all it has to do is revert back to the mean, not grow, which is the beautiful thing about TFC. TFC is fair valued at $57. And it was there for 5 years, which is why the spread from 30 to 45 is it's pretty basic. All it has to do is go back to $45 and really doesn't even have to grow to do that. Again, the reason they went down last quarter, a reason why the market's not the happiest with the earnings, is because they're being conservative. They're not being as aggressive with their loan book because they want to, they're a little afraid that when rates raise high, they need to make sure that the cost of capital they have is not as insecure or unsecured as some of these other banks. So I actually like that. I listened to the CEO twice saying, look, we have a plan with what we're doing. We're just being a little bit secure right now. I think Chris sold because he just wanted to capture some gains. It's not because he saw another opportunity, because to find another opportunity like TFC at the averages we have is a very hard thing to do. And so, but again, that's just who he is at this point, right? I've kind of, this is who he is at the end of the day. So you have to have your own thesis. Like, there's some stock he mentioned on Patreon yesterday. I'm not going to reveal it because he's going to do an episode on it earlier. I'm not buying it because I have zero conviction in that. I have zero thesis. So for people like, oh, you just follow Chris. He mentioned a stock yesterday he's very bullish on. I mean, he said it on Twitter, so I can say he's bullish on Disney. He put that on Twitter. I'm not buying Disney. And look, Disney may go to the moon. I'm not buying Disney. I have zero bullishness. If I'm not interested in Netflix, which is basically a media company disguised as a tech company, I'm definitely not bullish on Disney, that I don't even think has the IP to sustain itself as a relevant media company. So I haven't even heard his thesis. He's going to talk about it later on Finance Junkies, but it's not something that I'm going to follow because I just don't have a thesis on it. Now, maybe that changes, but I haven't been able to develop the thesis. TFC, I actually do have a decent level of thesis. Okay. So users on Spotify, 551 million. So look at that. That's not bad. From 515 to 551, their MAU growth is up 27%. So why is the market down? Why is the market taking it down? Because their margins just don't come in good, right? So 25.2% margins last year this time, now 24.1. Their margins continuously come down, and it's just not good. They lost $156 million last quarter. Now they lost $247 million. It's like you increased users by like almost 35 million, but you can't make a profit on them. And so this is the hard part. MAU net additions of 36 million were 21 million above guidance, an all-time high for the company. By the way, MAU literally means you open the app and you press it once. That is an MAU. You don't have to listen to a song. You don't have to listen to a podcast. It is literally you touch the app, it opens up, boom, you're now a monthly active user. While subscriber net additions of 10 million were 3 million ahead of guidance and the highest in Q2 in company history. Again, they're like, look, we added 10 million subscribers, 3 million ahead of guidance, but we can't make money on them. So the story on Spotify that shareholders are wondering is like, at what point, like, do you need 1 billion users to turn a profit? Like, at what point does this company finally make a profit? And so this is kind of the hard part here. Excluding these items, adjusted gross margin was in line, up 22% basis points year over year. Operating loss of 112 million was a little bit better than guidance, aided by lower marketing spend. They're encouraged by the strength we saw in Q2, and they have some momentum going on into Q3. And so again, this is the kind of issue with Spotify. Like, at the end of the day, it is really difficult. They're beating monthly active users phenomenally. Like, this is just amazing. They guide at 530, they bring in 551. Guide 217, bring in 220. And then their revenue and their guidance is just, or their revenue and their gross margins, just like, it's either bad or it's not the best. Operating loss, again, they lost 100 million euros more than they expected, and their gross margin came in at a whole percentage less than the gross margin that's already not the best at 25.5. So my question is, if you're buying the stock, how do you get out of this pickle? The beautiful business, or not business, beautiful company, beautiful app, beautiful product. Spotify is amazing. Everyone loves using Spotify. How do you compete in a world in which Google and Amazon and Apple can basically just do what you do, what you built an entire business on, as a loss leader, and your entire moat is like the product? See, this is different for me. Robinhood, I think, has a moat when it comes to UI UX. I think Spotify has a reason to be excited because of their UI UX, and people say it's like so much better than YouTube Music or whatever. The problem is the unit economics behind it, because you're paying the record labels all the fucking money from the subscriptions, don't have value. On top of that, no one can get discovered for their content. So if you upload a podcast on Spotify, it sits in a graveyard. There's literally zero shot of you popping up randomly in a feed, because they spent $2 billion on Joe Rogan and Caller Daddy and Trevor Noah, and they gave $20 million to Meghan and Harry Markle, these fucking UK like quite frankly brats. And The Weeknd had 3 billion streams on a song, and he barely made $20 million. He made like $18 million. You need to get 3 billion streams, which most artists will never do on a song, just to make the same amount of money that Spotify paid for 12 hours of podcast listening. That is the existential problem with their business model. And by the way, I think they could solve it really quickly. They could just actually build a YouTube of audio and help people get discovered, and that would like fundamentally change the dynamics of how creators and advertisers think of the business. But they're a company that's at the behest of the record labels, and so they have a really hard time being able to architect a model that is different. And so that is kind of the issue that's going on in the context of Spotify. My thesis on Disney is that they will just buy everything and become a monopoly. All right. That's fine. Amit, you are crazy. Disney has IP to sustain itself. It just doesn't have a skilled enough workers, writers, producers to sustain their massive collection. Really? Do you think Snow White is going to be relevant in the next couple of years? Or in the next, 10, 15 years? I don't know. Maybe you're right. I'm just skeptical about that. I don't think Mickey Mouse is going to be as relevant as we think it is 20 years from now. Wow, why is Palantir breaking out? Palantir now at $16.70. Not bad on Palantir, up 2.33%. And again, that's been kind of the reason why I've been a little bit more hesitant in the context of what we're seeing with Disney. It's just been hard for me to, super justify that it makes a lot of sense. Let's go to Disney right here. And again, Chris may change my mind. He may have a different thesis. Look, is Disney undervalued? For sure. I mean, you could argue yes. It was a high at 203. Even at August, it was 124, 2022. February 2023 is at 116. Is there upside for Disney to just revert back to the mean, which is what Chris likes doing, having a stock that reverts back to the mean? Yes. I just fundamentally, I do not have a qualitative thesis on this company. And I would love anyone in the chat to be able to give me one. But again, I really just don't have a thesis for understanding why I should be excited about Google at all. Or sorry, not Google, Disney. Google, you have a different thesis. Chris may change my mind. He may have a different thesis. Well, look, the only reason I'm saying this is because I haven't heard his thesis. I haven't heard his thesis. That's it. But on look, when he got bullish on PayPal, I got really bullish on PayPal because I've been thinking about PayPal for so long, right? So because I've been thinking about PayPal for so long, I'm like, oh, PayPal is going to be good. The problem with this one is like I'm just not bullish at all on Disney. So it's hard for me to be like, oh, Disney's amazing because I'm just not bullish on it. And so if I'm not bullish on it, it's hard for me to kind of get to that point. I only watch Disney because of Baby Yoda. That's interesting. That's interesting. Rocket Lab, what's this guy doing? Rocket Lab at 772. Rocket Lab is another stock that's been doing well. I'm not in it because, again, I don't even have a thesis on space to be. Again, at least I would hope people think that if I buy a stock, I have a thesis going into it. I've gotten to that point as an investor where I can at least TFC recovering now a little bit from 32, where I have a thesis on a company. And so my thesis on the company is that my thesis on a company on Disney or Rocket Lab is that I don't have one, so I'm not going to buy it. I'm not just going to buy it to buy it. Now, Vitaly's been making me develop a thesis for Enphase. And so that one, it's kind of hammered into me that I should start getting, interested in this one a little bit more and taking it seriously. But I just don't have a thesis on some of the other ones. And that's why it's harder. I think we got some Palantir news, folks. We got a PR. We got some Palantir news, folks. We got some Palantir news, folks. We got some. So you have one thesis. Yes. And my thesis is that Bitcoin is a scam. No, I'm just kidding. I'm just kidding, Philip Rizzo. I'm just kidding. That was just to poke at you a little bit. That was just to poke at you a little bit. Just a little bit. Just a little bit. Let's see. Give me 1 second. Let me pull something up. Okay, here we go. So what do we have? What do we have? What do I have? What am I looking for? What was I looking for? Oh, Palantir news. Oh man, my brain just farted right there. Okay, so Palantir. So if we go to Daily Palantir on Twitter, which by the way, if you're not following Daily Palantir, you need to be making sure you're following Daily Palantir. We have news with JD Power. Okay, so here we go. This is from JD Power. JD Power teams with Palantir to create unique, unique solutions for the automotive industry. Interesting. First of its kind collaboration integrates JD Power proprietary data sets with Palantir's Foundry and AIP to create new analytics products. Automotive OEMs will also be able to confidently combine their data with JD Power's data to develop deeper insights. JD Power is the largest automotive data company in the world. They basically, if you need any type of automotive data, JD Power is the company that stores all that data, and then they license that data for a lot of different use cases. We knew they were partnering with Palantir, but today it's official. So JD Power will leverage Palantir Foundry and AIP to help integrate its industry-leading automotive data sets, including incentives, retail sales valuations, vehicle configuration, service and warranty, new and used warranty, and automotive customer experience to support and develop the new analytic models and workflow solutions, which will help address some of the auto industry's toughest issues. These combined capabilities will also help facilitate collaboration between automakers and industry regulators as new technologies such as electrification and autonomous driving become more widely accepted. I'll do a video going further deeper on this, but yeah, obviously not a bad deal. I mean, we knew they were at AIPCon, so it seems like they are more excited. We'll see if they're at AIPCon 2. We're having another AIP conference later this year. I would hope it's new people, but they might bring back some of the same old people to talk about their results. So we might see another thing as well if they come in. Oh, I wasn't even sharing it. Damn it. You guys were seeing this. I was reading from this. You guys were seeing the Twitter thing. So this is what I was looking at right here. So not bad. Not bad at all for Palantir and another partnership. All right. So so here's the moment where we get to the live stream. I have come to a conclusion. Okay. I thought long and hard about this decision last night. I'm going to show you guys the conclusion I've come to. Some of you will probably be proud of me to coming to this conclusion. Does anyone want to guess what my conclusion is that I've come to before I share what my conclusion is? Anyone want to guess? I have come to a conclusion Let me see what you guys tweet or say in the chat before I show you. This will be the last thing I do, and then I'm out for the market open. There it goes. I think the conclusion is settled. Did it settle? Yeah, it's in. Okay. Ladies and gentlemen, I have done it. I've officially done it. I have officially done it. What do you guys think I've done? What do you think? What do you think it is? What do you think it is? What do you think it is? I'm about to tell you in 2 seconds. Yeah, I've done it. It's official. All right, it's official. It's official. It's official. It's official. Patreon. I'm starting a Patreon. Yo, I have a Patreon, okay? I just don't know what the fuck to post on it, which is why I don't post. Like, I feel so bad, bro. I have 28 Patreons and they get zero value from me because I give all my content for free. I don't do anything behind a paywall. And so I'm trying to figure out what the hell can I post on Patreon? Because, like, literally, if like 300 of you subscribe to me on Patreon, it would just like, it would cover so many of my expenses. I would never have to worry about YouTube revenue being up or down. It would be like perfect for me. But you need to have a reason to pay $5 a month. And I can't say I have justified a reason to do $5 a month. So yeah, I got to figure out the Patreon thing. But I have a Patreon. I just literally, there's no value. It's like literally just to support me. So okay, here we go. You guys ready? You guys ready to see what I've done? What I have done this morning? Here we go. It is time to expose what I have done. I thought about this a lot last night and I decided it is time to do it. You guys ready? You guys ready? I may just start an OnlyFans, bro. That'd be crazy if I started an OnlyFans. Premature ejaculated. Wow. Stop wearing gloves. The amount of roasting I'm getting. I bought AMC. You guys are so... You sold all your Palantir and moved on your life rather than spending your time investing in a meme. It's funny because of the joke, but it's also funny because you think it's a meme company. And like, look, you're right. You're fair to assume whatever you're fair to assume, but it's just, bro, I've done so much research to the point where I don't care if the stock's $2 anymore. This is not a meme company. This is like the most revolution. Like a CEO of a meme company is writing about the Oppenheimer moment of AI in the New York Times. I don't know, bro. Like it's just hard for me to imagine that's a meme company. You have no pants on. No, I have pants on. All right, you guys ready? Shaved your balls. I will never do that. I will never do that. All right, here we go. Here we go. This is what I did. I have officially sold half of my sister's SoFi 712 spread options in order to take out the initial capital she gave me to invest in this company. I bought for her 134 calls at an average price of 93 cents. The spread is at $100.95, so I am up 100%, more than 100% on those calls. I had 134. I now have 70, which means I sold 65 of them. You can see it right there. Sold right there in 2 orders. And I have officially gotten back the $12,000 she gave to me to buy these option contracts. And now she has 70 contracts left, which means I am officially letting house money determine the rest of her gains. All right, let's see the chat. Are you guys proud of me? Are you guys happy? You guys happy? Ah, there we go. There we go. We got some happiness. We got some happiness. Vitali, dad's happy. Dad's happy. So why did I do this? Okay. The reason I did this, quite honestly, it's not because of fucking Vitali or Chris or any of you motherfuckers in the chat that told me to do this. It's not because of any of you guys. It's not because of any of you guys. No, I'm just kidding. You guys definitely played a role in helping me think about this. The reason I did this, quite honestly, I stayed up till 4 a.m. last night. It doesn't look like that. It looks like I got my beauty sleep, right? It looks like I'm good. The reason I did this is because I researched a lot about the market last night. When I mean a lot, I mean like you guys don't understand. If you just look at my web browser history, I was reading article after article after article. I believe that there is a world in which there are a couple of different events that could happen that could lead to something that is not the best. And on SoFi in particular, the thing is up 60%. It's up 100% from the lows at 470, more than 100%. And so one of the things I was thinking about yesterday, which is what if earnings goes well, but the market sells the news, just like they did with student loans? Do you guys remember that? just like when they did with student loans, they sold the news. And I was just like, I can deal with that volatility with my capital. Okay. My capital, if it goes back down to $4, to be honest, I would be happy to buy some more of the spreads I have, because I would be like, that's a deal of a lifetime. I don't want to live every night thinking my sister is down, because if that happened, she would be down like thousands of dollars, right? Like, make no mistake about it. All the gains she has would disappear and she would start to be down 12,000 if we have a sell the news type of event, or if we have some other things that are going on in the economy in terms of just the frothiness declining. And so that's why I made the decision for my sister's capital. That's why I made the decision. And of course, SoFi is now going to go to the moon, because that's what happens all the time. This is exactly what happens. But I honestly started feeling it last night. Like, I got to the point where I was like, yo, I'm probably right about SoFi being at least $12, which, by the way, that was her strike. It has to be fucking $12 by January 2025, and she would make $46,000. Now, based on the numbers, she'll make about $29,000 if it hits $12 by January 2025. So it's a loss of 16 grand, which is substantial in terms of the gains she could have gotten. But in the back of my head, I'm just like, if I'm wrong about this and something dramatic happens in this economy and things melt over, I don't want to lose my sister $12,000, even though she trusts me to be fine. So yeah, that's kind of why it's happening. And so that's why it happened. Yeah, 29K is still amazing. Right. And so this is where I hope you guys are seeing a little bit of the evolution of me as an investor. This is where I'm not being greedy, or I'm not trying to be overly greedy. I'm not trying to be like, well, SoFi is probably going to be $12. So why the fuck should I worry, about selling some of this stuff? Because if more likely than not, 2025, it's $12. Fed has cut some interest rates. I can give my sister $16,000 versus, or $46,000 versus $30,000. But it's about the process in between, right? I don't want to go to sleep every night, especially knowing, like, the anxiety I started feeling last night, thinking, oh, it's the day before SoFi earnings. What if SoFi not only shits the bed, what if the market just shits the bed because SoFi is up so much and it's a sell the news, and then it's like her position is just dramatically down, and now I'm waiting for that shit to get back up. Every day I would be so fucking anxious. My capital, I don't care. I can handle that. Like, it is what it is. Her capital, it's not the best in the world for me. So please get the 30% for short-term gains. I actually think I'm not going to have to deal with short-term gains because I have some losses. I wrote off at least more than $3 grand. And so the losses are definitely going to wash out. Like, it's 20%, 0.20 times 12,000, 2,400. Yeah. So it should be a wash. So 2,400, I would have to pay in taxes on that. I've lost you're legally allowed to write off 3,000, right? Every year. So there shouldn't be no taxes on this, actually. So I think it should be okay. Richie, dude, sell your sister's original position. Richie, you're a little late. That's exactly what I've done. So, and now SoFi's going up, right? I don't even want to, the fucking stock's probably going up. If I look at it right, the fucking stock, where is it at right now? Where is it at? Where the fuck is SoFi? Where is it? 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 Where the fuck is it? 960, 970. Oh, 953. Okay, that's not that great. Okay, so it's doing well for today. Obviously, it's going up, but look, I can deal with it going up because at the end of the day, it is important for me to get back her initial capital. And look, I was blessed enough to be able to get her initial capital, and now the money that's riding, it's literally riding, for free. Like, it could go to shit or it could go to the moon, but all of that is free money at the end of the day. And so I'm going to be able to return her $12,000 while also hopefully being able to get her some gains by 2024, end of 2024. Where's Palantir at? I hope you guys are proud of me. I decided to make the decision last night. Palantir now $16.57. And honestly, I made the decision because I couldn't handle the anxiety. I was starting to, and again, yes, like Chris, Vitaly, Carlos, I love those guys. They influenced me as well. But really, I swear, I spent 5 hours reading articles last night. And the more I was reading, I was just like, fuck, bro, we might be in a place where we are going to see some volatility over the next 6 months, given how well 2023 is done. I hope that's not the case. I really hope that the end of 2023 is amazing and we get into a booming 2024. But if it's not, which we're trading 20 times earnings, it's a very frothy, kind of volatile, fragile market. If I'm wrong and I'm not right on a lot of things, then I'll be fucked. And not really I'll be fucked. My sister will be fucked. And she's she's a good person. She doesn't deserve to get screwed over like that. So her initial capital is now safe. It's officially done. It is officially done. Buy your sister end phase now. I was like, now this is what we got to do. We're about to enter the stage of where we count all the gains you could have had. Basically, I know that's gonna happen, but at the end of the day, I had to do it, bro. Because look, even though do I think SoFi is gonna be $12 fucking by fucking January 25th? Yes. And did I think that when I was buying these contracts cheap as shit and I was like buying them like I was fucking paying pennies on the dollar? Yes. But if I'm wrong, that's the problem. You can write off more than 3,000, but Johnny, you need to consult me on these taxes, bro. Or I need to get a better accountant because I feel like I should. Yeah, I should be. I took some decent losses this year, some old positions, so I should be able to. I definitely have enough losses to offset the capital gains on this 12,000. Absolutely. So I just need to make sure I have the right guy that does it. SoFi tomorrow now that it's sold. That's exactly Mateo. Stop saying that. That's exactly what's gonna happen, bro. Like I know it's gonna happen. And it's like it sucks. But I needed to do what needed to be done. And it was also important to myself to prove to myself that I'm not overly cautious and optimistic over some of this shit. So what was your cost basis? 93 cents, bro. The cost basis was 93 cents. I have never paid 93 cents for something expecting to get 5.5x on that 93 cents. And that's what I did. So yeah, that's what needed to be done. Where are I have the 1015s. The 1015s, are they doing good? They're doing pretty good today. Yeah, they're not bad. It had to be done. At least I can sleep a little bit better at night. I can sleep a little bit better knowing that. You know what I really should have done? I was going to buy those puts on Spotify, but I didn't buy the puts on Spotify. But I should have bought those. But I thought the subscriber growth would propel them higher, but it didn't. So, all right, that's it. You will hear her say, why did you sell when it hits 12? Yeah, I'm about to go tell her right now. I want to see her reaction. I'll let you guys know on Twitter. So make sure you're following on Twitter. It's in the description. Please make sure you're following on Twitter. I'll update on Twitter. But I think she'll be okay with it. I mean, look, she doesn't really know much about this stuff. So I'll tell her that, look, you're getting $12,000 back. So here you go. Bro, the thing about my sister, bro, this is why me and my sister have a great relationship. I'll end it here. Bro, my sister doesn't even ask me about these options. I mean, she literally has so much trust in me. She's just like yesterday I tried telling her so Anthony Noto, and she was watching Netflix. She was watching Too Hot to Handle, and she was like, oh, interesting. And I'm like, bro, you gave me $12,000 and you literally don't care about what happens to the 12,000. She was like, I hope you figure it out. And so, I think, me and my sister have always had a good relationship, but so she'll respect if I sell it or if I don't sell it. I mean, she's going to ultimately default to me, but that gave me another sense of humility, because if she has that much faith in me, I should probably not fuck it up. So I should probably make sure she's whole. So yeah, that's it. Is she rich? No. She was a teacher for 5 years. She just recently got a decent payment boost. I mean, she's making like $96,000 now a year. She was making like 56 for the past couple of years. She's like an administrator now. But the teachers, the taxes they take out of teachers are brutal. Now, the benefits they give are amazing, but the taxes are also tough. So she's making decent money now. But the day she learns what options are, because she trusts you so much, you have to be more cautious. Yeah, that's pretty much it, basically. All right, that's it for me. So Google Microsoft 345. Make sure you guys are here. We're going to see what happens. Spotify shit the bed this morning. I hope Google and Microsoft do not shit the bed for the sake of all of our fucking portfolios. Please, Google, just sell some fucking ads. Microsoft, just sell some more Microsoft Word. Just make sure things are excelling. Make sure the points have plenty of power in your presentation. Okay? We need to make sure things are all right. Amit is out here exposing his family members' income. Look, I think income should stop being taboo. I've exposed my income. Look up Amit 2022 income on YouTube. You can look at my income. I don't give a fuck. I mean, if we're gonna run a finance channel and we're not gonna be transparent about income, I don't know. I mean, I would hope you guys know what I'm making and kind of so that I can't be like, hey guys, I bought fucking $50,000 of Enphase. And like, where did you get $50,000 from? What cocaine are you selling? Admit you're a unemployed YouTuber. You don't have $50,000 to buy Enphase. So that's how we stay accountable. Hard being a teacher in this woke don't offend environment. Don't think people realize the pressure on them. Bro, okay, this is the last thing I'll say. Astricus, I am so thankful for this comment. The amount of shit my sister went through as a teacher last year because of this woke don't offend anyone environment. Like, bro, you cannot imagine. She would come home crying for months because the way these schools are right now is, and she didn't say anything bad. She is an administrator. So her teachers sometimes fucked up, and her managing the teachers was a shit ton of pressure on her. Because like sometimes the teachers just like made a mistake, or the teachers didn't even make a mistake. The kid is just fucking overly upset because the teacher says one thing, and then like the shit she had to deal with this year is insane. So you are 1000% correct, bro. Like, bro, she would tell me at lunchtime, a kid would say a joke to another kid. The other kid would fucking report to the superintendent of the school district about the joke that was made. I was like, when I was in high school, which wasn't that far ago, it was 7 years ago, I was called a terrorist every single day at the lunch table by the black kids, by the Hispanic kids, by the Puerto Rican kids. Like I was like, you just had to take it. You just had to, like, you can't cry about that shit. Go to the fucking principal. Oh, they called me a terrorist. It's like, motherfucker, you got a big ass beard when you're 14. You look like one. Sorry. Like, fuck. This is what you got. I can make that joke, by the way. I'm from that part of the world. So it's like, that's the shit I dealt with. And I had no problem. I learned how to be a man. I learned how to fucking fight back. And these kids, you say one thing, bro, one fucking thing. These kids are ready to literally start protests over this shit. And so, yeah, she had to deal with a lot of shit. But hopefully this year is a little bit better. And, she's able to keep going from there. My daughter quit teaching. Wow. She was teaching high school for a while, 10th grade, 11th grade English, but now she's an administrator. So now she's not a teacher anymore. So that's why she's getting paid a lot more, but also managing other people is just tough. Okay. Right before we leave, super chat, $13.99. Thank you, David. Hi, Amat. Can you give me some advice on how do I go about breaking the news to my lazy, overweight, spoiled pug that he has to start a diet ASAP and cut back on Oreos? Oh my God. You gotta tell him that, look, we can't do this. We can't, the Cheerios are great for reducing heartburn, if you're a human. So eating Cheerios actually reduces your heartburn odds, which is actually really good. But in terms of your overweight, spoiled pug, you got to get him on the veggies, bro, on the veggies. You gotta just take away the Cheerios. No matter how much he gives you that cute pug face, you can't show him that Cheerios. Just like SoFi, no matter how much she's saying that she's gonna go to $12, sometimes you got to be disciplined and sell to preserve capital, especially if it's not your capital. So, okay, that's it for me. Thank you everybody so much. I appreciate it. Live 3:45, Google and Microsoft. I will be here. Make sure you're here. We got some earnings to cover. Thank you, everybody. I appreciate it. I'll see you guys later today. Bye-bye.